All right. Good morning, good morning, good morning, good morning, good morning, guys. Welcome, welcome, welcome. All right. So, this is a big stream. This is one I've been trying to delay for a long time. I really just feel shitty about doing this stream, but there are some serious issues in the market that I no longer can ignore, straight up. So, what this is going to be about is going to be about talking about the conditions that we were looking for on this market. And of course, we're going to talk about how we're going to go forward from here. Because I do think that we do have some major show weaknesses. And there is some serious changes that have to be made because our conditions are no longer met. All right. Or our confidence level is no longer there. So, live stream, talk about the adjustments, the trading style adjustments. So yeah, and so this is a weird situation, all right? Like, I really do not like having to do this. I do not like having to adjust the way that we've been doing things and essentially changing the expectations of for the market. But at the same time, though, we can't be stubborn and just ignore all the things that are happening. So let's go ahead and do this. All right. Let's get the comments up. Yeah, this is a tough stream, guys. Like, I really, really, really have been trying to avoid doing this. It was a really, like, yesterday sucked. Like, it just really, because I realized we needed to do this yesterday. And it's one of those things that you have to come out here and basically admit that you were wrong about a lot of things. And it's frustrating, right? So let's talk about what we have been expecting and then what the adjustments are, right? So we're going to go to the very high time frame. And the expectations have been that this is it, right? Essentially, we're going to come up here, tap the golden pocket, and then continue back down, right? The problem is there are some serious things that are no longer making it to where I think this is a guarantee, right? Like, before this most recent movement, this makes sense. Everything about this makes sense. This is what the expectations have been. They have been this way since, I believe, December. I think December is whenever I came out and I said, guys, this is the exit plan. This is how I'm going to exit the market. This all makes sense. I'm going to go ahead and do this. And the goal was we were going to let the market increase. And then as the market started dropping, I was going to hold. Right here, my exit strategy revealed. This one, and there's also one more right here. Where's it at? I can't find it. There's one. Oh, right here. These two. This and this. And it talks about in detail what the strategy has been. And it makes sense. In previous markets, it makes sense, right? You let the market go up. Let me go back over here. You let the market go up, let the market come down, and then you sell the retracement. Let the market go up, the market go down, sell the retracement, right? And where the retracement? It's always the same place. Like, this is the place the retracement always goes back to. 618, right? This is what happens in the market. Go back here to 2017 time frame. What happened? We had an increase, we had a decrease, and we had a retracement right back there, right? There's so many different times where you can go back here and the golden pocket retracement, all the time throughout here. We have golden pocket retracements, right? The issue is this latest drop over here, although it doesn't look like it's much on the high time frame, it's actually very, very significant. And I think it would be disingenuous for me to come out here and say, oh, yeah, everything's great, guys. I don't know, man. Now it's actually getting to the points where it does not look healthy at this point. It really doesn't. So let's go ahead and talk about on this notepad I have here, right? These are the reasons why to be bullish. These are the reasons why to be bearish. As you guys can see, the reasons to be bullish are more than the reasons to be bearish, right? But let's start knocking off ones that have already been invalidated. Untapped lows. Well, we swept the low Did we get a reaction? No. No, we did not get a reaction. So this is no longer valid. So let's go ahead and delete it. Okay. Parallel channel holding. Well, it depends which one you're looking at. If you're looking at the major one, the macro one, yes, the macro one is holding, but it's not pretty. Okay, let's go ahead and draw that on here real quick, and we can look at what we're looking at on the macro parallel channel. And yeah, technically it probably is still in existence, but it's not very good right now. Okay, like depends upon how you're drawing it. We're right on the bottom side of the channel. I get that, right? This is still a bearish structure, and like this reaction over here has not been good whatsoever. All right. So yeah, that one's still holding. But if you go to the micro one, we do have another parallel channel over here that was broken down. So we have this right here, draw it up here, draw it down. You guys can see this is a clear breakdown with strength, with conviction. This right here does not look good, and we have not had any bounce at our key levels that you would expect to have a bounce. We just haven't received it yet, guys, and that's not okay. So parallel channel holding. Yes and no. Okay, falling wedge. The falling wedge was this, right? We have the bottom line, top line. Let me draw it real quick just so you guys can have clear. Top line, bottom line. You guys see that? Falling wedges generally break up. Well, did it break up? No. No, it did not, right? This is a show of weakness, guys. This is absolutely a show of weakness. So falling wedge did not hold. Weekly breaker golden pocket. Let's talk about that as well. Go over here. The weekly breaker is right here. We have not officially lost it yet, but we have a lot of work to do in a very short amount of time. Okay, so unless we get above here, like there's nothing below us. There is nothing but clear skies beneath us at this point. So this weekly breaker, it's still premature, make it very clear, but right now we're definitely beneath it, right? Unless we get above 38,000 in the next 24 hours, or what, 33 hours. We have 33 hours to get back above it. If we don't get above it, this is now a solid resistance level, and we know what happens when we get to resistance levels like that in the high time frame. It's not pretty. All right, now we have actually bounced off of this one again. Okay, but this has been tested so many times, I don't know if it's actually going to hold for a very long amount of time, right? Given all the situations and all the different things we're looking for. So, until we get above here, that's the key. Like, once we get above here, we can start talking about higher levels and shit. But right now, no, absolutely not. Like, it doesn't look good. All right, golden pocket. The golden pocket is this. Yeah. Are we beneath the golden pocket? Yes. Right? We are no longer in the golden pocket, so we cannot use that as a bullish bias. So now this needs to go away, right? So golden pocket holding, no. Extreme negative funding, probably still existence. Let's look. Yeah, I think negative funding is still negative, and that's definitely a bullish sign. So that one's still in existence. 2 daily bullish divergences. I'm not sure. I'm pretty sure they may have actually been validated. Let's look at it. No, still, we still have a bullish divergence, so that is a good thing. Okay, so bullish divergence still exists, and then long is increasing while price decreases. So these 4 reasons are now the reasons why we have to be bullish. But we also have some very, very, very serious things happening in the traditional market, right? For one, DXY. DXY looks absolutely horrible, guys. Like, this is terrifying, okay? We do not want to see this thing go aggressively upwards, and that's exactly what we're getting. We're getting a very parabolic movement to the upside. We have not gotten any pullback of significance, and the only pullback that we did receive, you guys can see, was just a bullish retest of this trend line. This is definitely not a good look. Okay, we want to see this drop, and we absolutely have not seen it drop. Dow had a pretty decent close yesterday, but like this entire structure looks terrifying. This looks terrifying, right? You go to the high time frame, you can see the very clear rounded top starting to break down. We're not able to have any reaction. To me, this looks like it wants more lows. It wants to keep dropping, and it's probably going to happen, right? I would not be surprised one bit if we come back down here and test the top side of this channel, which is still 3,000 points down, which will absolutely bring Bitcoin down below its parallel channel, in which case things could really, really, really get ugly. All right. So all of that obviously does not look great. Markets look like ass. We've talked about that. Trend is your friend, right? Trend is your friend. Well, let's look at the trend. The trend on Bitcoin's down. You guys can see that, right? Trend, trend, trend. Series of, it was a high, lower, low, or a lower low, or a high, low, higher low, lower low, lower high. I'm losing my mind today. You guys know what I mean, though. The trend is definitely down, right? We're in a consolidation structure. This is still a consolidation. This is still after a downtrend. It's consolidation. We are fighting the trend. We could always fight the trend, right? Eventually, the market's going to reverse. But right now, we don't have any signs showing us that the market is ready to reverse, okay? And then the last thing on here, rejection of the monthly breaker yearly open. Here's the frustrating part about this. We've had this level marked out. The yearly open and monthly breaker, we had a plan for it. We executed the plan. Like we had a plan. We executed it. The problem is, though, I did not expect us to drop this far down. And we have, right? So although I was able to take some profits up here, I re-entered the market on these bounces. And so now we're just collapsing back further. So, yeah. So, yeah, all in all, I think the market now favors the bears on the macro perspective, okay? Let me make it very clear. Macro perspective, I think it now favors the bears, okay? And I have been bearish on this market for a very long time, okay? Like, no shit, I became bearish on this market when we lost this 3-day point of breakdown. So over here at 53,000, that's whenever I became a macro bear, okay? But I was still expecting one last pump, and then a complete, utter crash down to low levels, right? Now I don't have that sort of certainty that we are going to get this retracement bounce given all of the bearish pressures in the traditional markets as well as what we've seen so far over here. So yeah, like I think it makes a lot of sense though. So now I've basically painted the picture as to why I feel the way that I feel. Okay, I've painted that picture. Now you guys understand why I am now becoming a macro bear. First off, I do not expect us just to collapse. Okay? That's not exactly that's not exactly what I'm looking for here. I don't necessarily think we're going to utterly just collapse from here, okay? We're close, but not yet. I think we are going to be able to get up here and test this level, okay? But here's the deal. When we get up here, I do think this will be a rejection, a bearish retest before a continuation back down. So this right here is the level that I'm really looking at to really exit a lot of my positions. Okay, my long-term holds that I've been holding on to for a very long time, those will be exited at this level. I think that makes the most sense, okay? So here's the cool news about this, okay? Here's the good news. I am now bear. I am bear. I'm bearish, okay? Macro bearish. I'm switching my strategy from having that assumption that we're going to get up to this level, right? I'm no longer having that assumption. From this day forward, my assumption is every single bounce is a sell opportunity, okay? Let me drink my Coke real quick. All right, so every single bounce is going to be every single bounce is a sell opportunity. But here's the cool news about this whole situation, okay? I've already made a video on how we trade this. We've already talked about this, and this is actually what I was doing during the bear market in 2018 to 2020, okay? 2018 to 2020, I had a very clear-cut strategy that was working very effectively for me. It was. This entire chop, nope, wrong chart. Okay, all this chop in here, right? All this crazy crap we have. This is whenever I was able to really perfect this strategy and learn how to trade bear markets. The thing is, though, I did not think we were here. I assumed we still had that last little pump, okay? Well, if I'm no longer expecting it anymore, now we can transition into a full-on bear market mode style of trading. So if you want to really get a full-on description of how this works, I made a video of it right here. Trading in a bear market, how to thrive and not just survive. I did exceptionally well in the bear market given everything, okay? And I'm going to show you guys this chart on here to give you guys an idea of how well it works. This right here was the chart of Bitcoin at the time of this posting, okay? You guys can see Bitcoin increased by 318% from here to here. Okay, this is when I entered the market, in this level right here, and at the time of posting was right here. Okay, basically, what I was able to do is during the bear market, I was able to accumulate 5,000% more gains because I was able to essentially buy the support, sell the resistance. I know that sounds so stupid and so easy, but I have a very solid system that actually does work really, really well. Now, the thing about it, though, is you have to make an assumption. Your assumption is every single one of these bounces is going to fail. What? I don't know what you want, man. All right, whatever. I don't really care. Okay, so either way, this is every single one of these bounces is an opportunity to sell. Every single one of them, right? And every time you enter into a trade, you have to every single time you enter into a trade, you have to have a target in mind. All right. Now, here's some rules that we do on this bear market style trading. Okay, here are the rules. I'm going to go ahead and delete this. No, I'm going to do this. I'm going to go ahead and save all this. Oh, I already deleted it all? All right, whatever. Okay, I'm going to go back through. I'm going to delete all this. And then we're going to throw out the rules for bear market trading. Okay. Every entry must have predefined exits. Okay. Every single time you buy, you have to already have an exit point in place. Okay. Exits will not be new highs. Okay. Your exits will not be new highs. No moonbags. That's something I've been doing differently. I've had a moonbag because I keep assuming we're going to go higher, right? No moonbags. Risk to reward ratio. Risk to reward must be 4R. Okay? I only take 4R trades. Okay? 4R trades or higher. 4R trade or higher. Now, the reason why I do 4R, you can also do 3R if you're really strict on your stop losses, but I'm not. I'm not strict on my stop losses. I try to play the stop losses, and I do what's called a managed stop loss. Okay, so essentially what I do is, if you don't know what I'm talking about right now, like you need to learn this because it's actually very important. This risk to reward box is very, very important, right? So let's say you have a trade, and I don't know what the trade is, but let's say you're going to enter into a trade. All right. You're going to need to adjust your trade, whatever, right? You're going to need to enter into your position. Oops. Okay, enter into a position, and you're going to have to adjust your targets and your stop losses to be 4R. That means if your target's a lot higher, that means that your stop loss can be looser. Okay, like that's a 4R trade, right? That's a 4R trade right there. Now, what that means for me is once I start seeing some levels lost, like let's say my stop loss is down here because of a breaker. Okay, let's say this breaker is over here and I like this breaker, right? This breaker is what I'm looking for as to what is my support level, because I go into a high conviction trade that has a very clear level of invalidation and clear things I'm looking for, right? So on this breaker, Let's say this is the breaker. Okay. Now I'm going to allow myself a 4R level, but realistically, what I'm looking for is this price action. Okay. Let's say it goes against my trend. I'm going to come down here. I get a close, right? I'm not going to sell right here. What I'm going to do instead is I'm going to try to wait and get a retest up here so I take as little of a loss as possible. But I'm still looking to exit the trade. So whenever I lose my level, I'm looking to exit that trade. But if it does drop below here, that's my no shit, I'm out level, right? And that also could have, it's managed. It means I have to go in there and manually exit the trade, which means this actually may get out down here. But the good news is since I do have this extra space on here, you guys can see now it becomes a 3R trade, right? So I do a 4R managed stop loss, which happens to essentially still get me a 3R trade if I'm managing that, right? It allows me some wiggle room in case I don't actually get my exit I'm looking for. All right, and that's why I do it. You can just do a solid 3R stop loss, but I don't know. I like my way. It works. It works well for me. But obviously, I have to be awake and available to actually adjust these stop losses. All right, now, yeah, 4R trade or higher for managed stop loss. R can be 3R with a tight or with a hard limit stop loss. Okay, and why is it so important to worry about the R's, right? Well, here's the thing. When you have good risk to reward, that means that I could actually take this trade 4 times, and as long as I win one of them, I come out break even. Okay? As long as I take this trade 4 times, as long as I win one of them, I come out break even. That means that I can lose more than I win, and I'll still come out ahead. All right? And you just do this over and over and over again, right? No targets. Wait, no final targets. Uh, 15% due to fees. Accounting for fees. Okay. Yeah, every entry must have predefined exits. Exits will not be. And also understand this as well. You can have, or not just that you can, you should have multiple exits across the board. So I'll have one here, one here. I'll have a range in here, right? And I'm going to be like, all right, well, I'm going to go ahead and take 10%, 10%, 80%, or whatever, right? Whatever my exit is. But I already have those pre-selected and pre-placed, right? I'm not targeting higher. It doesn't matter if it goes higher. It's irrelevant. Why? Because, remember, exits will not be new highs. No moonbags. We don't play moonbags in the strategy. All we do is take what the market gives us, and then what happens is if it starts to show strength above it, like let's say it starts doing this and it goes up here, starts to go up here, right? If we get past our level, now we can say, okay, cool. Now we have a new range established. So once we do come back down here again, now we can play this level, right? And that's okay. But the important thing is, though, guys, is we do not go for new highs, all right? So yeah, once we get back to the previous high, that's it. You're 100% out of that position. 100%. I play 100% out of position. Less positions. Positions with high conviction. Okay, large high conviction plays. There you go. Large high conviction plays. Okay, this is maybe like something that's gonna like really burn at you if you always heard the term, diversification is key. And for what I was doing prior to this, diversification was very important, right? You want to make sure that you have good exposure around the whole market, etc. But in this different style of trading, you actually do not want high diversification. Okay, you do not want high diversification. Instead, you're doing a targeted high conviction play, and you have a very set condition as to why you're entering and why you're exiting. So on this, all right, sorry about that. So while you're on this, what I'll do is I'll have a position size, right? And let's say I don't know what position size you're playing. It may be $100, it may be $50,000, whatever your position sizes are, right? You only have I think my rule I was doing, I got, it's been a while, guys. I mean, make it very clear. I haven't done this in like 2 years, but I know once I get back into it, it's very successful. I did it for a very long time. Um, five, I think it was five. No more than 3 open plays with 2 position sizes worth of fiat on sidelines. Yeah, there you go. No more than 3 open plays with 2 position sizes worth of fiat on the sideline. So what that means is you will have no more than 20% of your fiat invested in each asset at a time. Okay. So let's say you have, all right, hypothetically, right? LTC. Okay, you have LTC. How do I do this? All right, you have Litecoin. You are in a position size for Litecoin. How much are you going to put in that position size? Let's say your total capital that you want to allocate for this is like 100 grand. Okay, hypothetically, you have $100,000 you want to allocate it to this thing. That means only 60,000 can be allocated at a time. Okay, 40K is a sideline. Is on the sideline, right? And like my sideline one was like what's the right word I'm looking for? It's more of like a booster, but it's very, very rarely utilized. Okay, it's a booster, but very rarely utilized. And it would only be on there for a very short amount of time to help with my high convictionness. That's the word, high convictionness, and then I would take it right back off the sideline. So it's like putting your foot on the gas. Okay, so once you actually do have a show of strength, if you do have a really, really good play that's starting to take off and you're able to catch it early, etc., if you want to do a quick boost, that's your booster. Okay, as a quick booster. When conditions are right. I don't know what like the word I'm looking for. And I know like there's a lot to this, guys, but like it all makes sense. It's a lot to it. All right. Okay. 20,000 per position. That means we have 3 positions open at a time. And quick to cut losses. Holy shit, yes. Quick to cut. Oh my gosh, we are quick to cut. Quick to cut, quick to cut, quick to cut. Okay, as soon as it starts going bad against your position, well, whatever level you're going, you quit it. You cut it as quick as possible. Okay, I cannot make that clear enough. So capital preservation is key. Remember that we are in a bear market, and you are only playing bounces. Okay. We're in a bear market and you only play bounces. Okay. As far as I'm concerned, we are in a bear market, bear market, bear market. There are no new highs. This is it. Every single bounce is a sell the dip or sell the bounce opportunity. And I'm going to take that. Okay. But here's a cool thing. Okay. Here's the cool thing about this. This style of trading is very successful. It is. It's very successful. And I did it for like 2 years. Yeah, 2 years. Did it for 2 years, and I'm not kidding you guys. Like every single day, I would just go on there and just add a little bit more, add a little bit more. I would take my, 5% losses. I take my 15% gain. I take my 30% gain. And remember, each of these is 30% of that position size, right? And that's only what was allocated. So that means like it'd be 13% or it'd be 15% of 20%. Okay. So calculator, I got to calculate this out. So 20%, so 0.2 times 0.15, means I'm only going to be making, if I have a 20% play, yeah, 20% of my capital invested, okay, and I make 15% gains on that, that means I'm actually going to only increase my portfolio value by 3% on this movement, okay? But here's the thing though. If you increase your gains by your capital, your entire portfolio by 3% for every one of these movements, you can see how that compounds over time, right? But here's the thing though, right? We're no longer looking for 100x plays, 10x plays, okay? I don't care about the 10x plays. All I care about are these bounces, okay? And these bounces could be something like this. Well, here's Bitcoin Cash right here. Let's look for a good support level. We're on a support level over here. You guys see this is a breaker level. It's not really the cleanest play. Let's say it was, right? Okay, we have a clear level right there, right? Awesome. So what I'm going to do is I'm going to say, all right, where is a realistic price and target for this, right? Well, there's a breaker right here. Very clean, right? So what we're going to do is we're going to go ahead and enter to a position. Enter to a position here. I'm going to target here. Oh my gosh, I can grab it. And my stop loss, oh my gosh, this is so big. What the hell? Why is it so big there? Weird. Okay. Let's say we enter now. What are we looking for? At least 15%. Do we have 15% increase? Yes, we do. Okay, we can see that we have a 15% increase right there. And our stop loss, we need to make it a 4R, right? A 4R trade. There you go. There you go. This would be a solid trade based upon this condition. I just picked a random coin at a random time, and now you can see how this is a clear opportunity by doing here, right? So Bitcoin Cash, if you enter now, your stop loss below here, that is a 4R trade. You're targeting your 15%, and also you're already going to say, I'm going to buy here, I'm going to sell here, my stop loss is here, and I'm going to have little exit points across the way. Like this right here may be an exit point, right? I may take like 20% off here and 80% off there. There you go. Guys, this is literally it, right? But you have no moonbags. I'm not expecting it to get up here. If it gets up there, then we'll reevaluate, find a new play, etc., right? And if it starts trending down below here and it doesn't look like it's supposed to be looking like, guess what? We cut it. We move on. We take our loss. We move on to something else. This is it, guys. Now, as you guys can see as well, I don't short the market, okay? Shorting the market is always very dangerous, especially on shorting the market is also very dangerous during bear markets because these altcoins during bear markets absolutely just explode in the opposite directions a lot. They do. They just completely go crazy. I used spot positions during. I'm not going to say 100%. I did dabble with leverage occasionally, but most of the time it was spot positions only. So I actually own the coins. If it did have a wild movement or whatever, and I was able to negotiate that, etc. But that's how it is. Like this is the way that we did it, and it's very successful. It's just you're not going to be targeting those really, really high amounts anymore. But that being said, it's consistent. And it works. So, yeah, that's basically what we're going to be transitioning to. So, does that make sense, though, guys? Like, I know it's a lot, but it's basically it. Yeah. But overall, though, guys, like Bitcoin dominance looks really good right now. Like, there's a lot of really bullish signs in this market. There really are. Like, the longs are still very, very high, which I do like. Bitcoin dominance still looks really, really good. And this to me tells me there's a lot of opportunities in altcoins. A lot of opportunities. So we're gonna be able to find some really big winners here. But we just gotta be patient. Gotta be patient. Gotta be looking for the right opportunities. Oh, and then when I say high conviction, right? My high conviction plays are major levels, okay? I don't play with anything less than, I think, weeklies, maybe 3 days occasionally. Daily 200 moving averages are also a really good one for me. I love those. Fibonacci retracement levels, so golden pockets of macro structures, those are really good. And you can also do compounding and things of that nature. But ultimately, that's basically how it works, guys. Like you take your position, and there's also certain ways of entering into positions, laddering in, and showing, like getting the micro show of strength and things like that, and when to actually deploy that booster, right? The nitrous we have on the sideline. Those are also options as well. So, um, yeah, I'm excited. I honestly am. Like, I was really, really pissed yesterday about the whole situation, but I feel a lot better today. I feel a lot better. I feel more motivated. I feel more like energized and like, all right, you know what? It's okay. It's okay. We got this. So, yeah. I said check out XLM. Why? I want to know why you want me to check out XLM. Is there something good going on here, or is it just another garbage coin? Looks like garbage to me, buddy. Um, weekly, monthly. We're the monthly breakers. That's cool, I guess. So on the macro perspective, that looks fine. But again, I don't play macro anymore, right? We are short-term traders only. So I'm looking for short-term opportunities, and I don't see any yet. Don't see any yet. Looks like maybe a descending wedge or a descending triangle. Pretty shitty. Yeah, not much here. I mean, it looks decent on the high time frame, I guess. If you want to look, if you look at it like as a monthly level, I think it looks all right. But as far as looking for a short-term play, I don't see one yet. High time frame, nothing. No. 3-day, no. Daily, nope, nope, nope. I don't know what. I don't really have anything to say about this, man. Looks like garbage. Yep, looks like garbage. I don't know. Yeah, I don't really have anything. Looks pretty shitty. Yeah, but yeah, this is it, guys. This is how we do it. It works out really well. If you stick around, if you want to try to catch these, cool. But don't expect any more. Don't expect me to go after like really high targets. It's not happening. This is it, guys. This is literally how I'm playing the market. But it's consistent. It works. Now, the only way I'm going to change my mind on this whole, realistically, I'm going to play this until one of two things happens. Yeah, one of two things happens. One, get above here. I will consider. I will start considering here. If we get back above this weekly breaker, I will start considering that, hey, maybe I may have been premature and the golden pocket's still in play. I will consider it, right? Now, no matter where Bitcoin is at, if altcoins do this, if we bust down below here, yeah, I'm going hard. Okay, this is altcoin season for me, and I will go hard. But realistically, weekly breaker I think is probably like the key for me. So get above that, and it'll definitely be something I was not expecting, and I think that'd be a good idea for me to reconsider a lot of this. But until that happens, no, I'm just not interested. All right, guys. I have a wedding, or not a wedding. I have a graduation to go to of a buddy of mine. So I want to do a quick stream. Go out there, post this, so you guys can have this as a good reference. And yeah, that's basically it. As far as what I'm going to do, I'm going to liquidate most of my positions. Be aware of that. We're going to liquidate a lot of it. Now, I'm not going to liquidate here. I don't think it makes sense to liquidate here. I mentioned this earlier in the video. I think the place to liquidate is up here. If I can get into this area, that'd be a very clean level. Anywhere in here. I think that's where I'm going to start really liquidating some stuff. And I'll be looking for those high conviction plays. And it's going for that. Now, also, understand this as well. When you're looking for these high conviction plays, like, you're going to be waiting a while, right? Like, you don't really, you have to wait for those high conviction plays, right? And a lot of times you don't get your entry, or it takes off without you, or it just, like, there's just things that happen. And it's just like, well, guess we're waiting for something else. Also, if you are looking for high conviction plays with me, I am only going to be using Coinbase. Coinbase, Coinbase, Coinbase. Nothing else. Nothing else but Coinbase. Okay. Reason why it's a solid exchange that I do trust to a certain extent. I know the fees are high, but because I have that 15% requirement, it's not really that big of a deal. Also, with the volume of trading that I do, it's not really the fee structure is not bad at all. It's a lot. Fee structure is very terrifying for someone who doesn't trade a lot, but when you do trade a lot and you have a lot of volume, it's not really that big of a deal at all. Good selection of coins, high liquidity, good security. I have a lot of extra additional security features in place to make sure I'm extra secure on that exchange. Yada yada yada. So essentially, guys, I'm doing it off there. So if you find me plays on KuCoin, cool. I don't like them. I don't want them. I don't care about them because I'm not gonna be managing on multiple exchanges. One exchange only. So, and there's so many coins, guys. Like you're fine. Coinbase listings. Oh shit. Yeah, you can go in here. You can see all the different listings that exist. Coinbase coins list. I don't know what the right word is I'm looking for here. Oh, here we go. Okay, you can browse through here. There are a lot of assets. 10,000 assets? That can't be right. That's not right. Which ones are actually tradable? Whatever. Either way, though, guys, we'll be trading off the BTC and USD pairing as well. It's not just one or the other. So we'll be adding that in there because sometimes you'll be looking really good on the Bitcoin pairing, but not on the USD, and that's all right, right? So yeah, stick around, guys. I mean, there'll be a lot. There's gonna be a lot we're gonna be doing on here, but just understand that the thought process, the time frame, the expectations have changed. They have adjusted, and yeah, sucks. You know, I'm wrong. Hate to admit that, right? Hate admitting that you're wrong ever, but here we are. Supported crypto. Is this it? Ah, there we go. Look at all these. Look at all these. So you're telling me you can't find an opportunity in all of these coins? I'm gonna call you a liar. There's plenty of coins, like what, 100 or so at least. Player opportunities. A lot of them are not going to be following Bitcoin all the time, and they're going to have their divergences from what you're getting on Bitcoin. So, like, while Bitcoin's going up or down, a lot of these coins will be following it, but occasionally you're going to have a deviation. The deviations are what we're looking for, right? The 15, 30, 45% deviations are really what we're looking for. So, all right, guys, I'll let you go. I'm going to get to this graduation, but yeah. Have a good one. I hope this whole thing makes sense, and I hope I got to the point, and I will see you guys in the next one. I'll be doing a lot more adjustments later tonight. So this is like more like a little like letting you guys know what the overall plan is and going from there. But all right, have a good one, guys. I'll see you in the next one. Like always, stay safe out there.